What's up, everybody? Ben with the BTC Sessions here, and this is your daily session.
Hodl that Bitcoin.
Alright, before we jump into the news today, I just want to obviously quickly remind you guys, do check out my website, btcsessions.ca. There you can reach out to me directly, book your own BTC session, learn about Bitcoin, wallets, proper security, anything you like. Just simply scroll to the bottom and there is a contact form for you to reach out to me. Also, you can head to my Teespring link, and this is where you can pick up some BTC session swag. We've also got the hashtag Bitcoin Twitter shirt there. I'm sure I'll be adding more eventually. Been a little bit busy the past couple weeks though. And beyond that, let's just dive into the news. Now, this first story I have here is specific to Canadians, but only for the time being, because I believe this will become a little bit more of the norm down the road. So essentially, the Canada Federal Tax Agency, called the CRA, Canada Revenue Agency, is targeting crypto, Bitcoin and crypto investors for audits and in-depth questionnaires. So essentially, right now there's only 60 currently ongoing audits that we know of, but essentially they are going and not only auditing these individuals, but sending them some in-depth questions. Now, some of these questions have to do with things like, have you bought Bitcoin or cryptocurrency anonymously, either through individuals offline or through services like Changely or Shapeshift. They ask about coin join services or mixing services, which is something that you can do to anonymize your coins, so they are very, very difficult to link to you as an individual. And also asks individuals to list all wallet addresses that they currently control that are not associated with custodial services. So interesting there, because they've asked for addresses, not public keys. But even still, I feel that it's not the same as asking for an individual's bank account. So when you ask for somebody's address or extended public key, in a worst case scenario, you can now track not only what that person does with their money or what money they have currently, but you can backtrack all of their previous transactions, and you can see forward to whatever they do next and follow that down the line. So essentially, giving away this information means complete and total surveillance of every single transaction that a person can do, which is terrifying. And I don't think this is a great precedent to set. Perhaps if there was a way to disclose amounts without disclosing location and addresses, that would be better. But anyways, I digress. Let's continue on here. So the interesting thing here in relation to myself, my employer, so my boss, Francis Pouliot at Bull Bitcoin, was talking about this, and he was referring to using services to ensure that you maintain your financial privacy. And so he had posted earlier how to get cash for Bitcoins in Canada without using a bank account, peer-to-peer platform, or Bitcoin ATM. And he kind of outlined this and essentially said this is how you do it without having to use a bank account. And this is Jared Adams. Jared Adams is the CRA Project Oversight Director, so the Canada Revenue Agency Project Oversight Director. And he retweeted Francis and said, duly noted. And he said, also duly noted from the company's website, we recommend you avoid mentioning that the wire transfer is intended for Bitcoin purchase, as this may place your bank account under additional scrutiny and could lead to your wire transfers being canceled, which is a legit concern. Banks have not been friendly to cryptocurrency, and I would argue with no justification other than it's could potentially replace them down the road, which is very anti-competitive behavior. But then he goes on to say washingmachine.gif, alluding to the fact that the business is just a big money laundering machine. And this is coming from somebody that's working for the CRA. So I imagine that Jared Adams is supposed to remain relatively neutral and look at things from, I guess, a pretty level playing field from objectively. This doesn't seem to be the case. He's essentially making accusations against Francis Pouliot, Bull Bitcoin, and the entire company. I would argue completely unwarranted when Francis is essentially saying here, hey, be careful, banks are not super happy about cryptocurrency because it is the antithesis to their business model. They would rather have your money with them as opposed to you controlling it yourself, and you risk essentially your bank accounts being stalled or shut down or whatever if you allude to cryptocurrency in some cases. And Francis responded, and I'll read what he said. What do you mean by washing machine? He said, like hundreds of known cases of Canadian citizens and companies, I have had essential financial services like banking, payments, and credit cards restricted and accounts closed because of my usage of Bitcoin. The Senate duly noted this known problem, and Francis did go and talk to the Senate about Bitcoin and cryptocurrency, and he's also been trying to help with regulation and advise and offer insights into how this technology works. And again, he responds with duly noted. I'm curious what you meant by washing machine. I bet. So, I mean, to have somebody that's Project Oversight Director at the CRA responding like this in such a condescending fashion is a little scary and just outright not fair. And I would hope that moving forward, this kind of thing doesn't happen, but it's not especially great to be seeing stuff like this. Anyways, let's go back to the story a little bit. Now, the CRA here has said, where is it? They've essentially said that they just want Canadians to understand, they want the taxpayers to understand their tax obligations when using digital currencies and remind them that using digital currency does not exempt consumers from their tax obligations. They also said that currently audits are only aimed at their highest risk files. So do we know exactly what that means? No, but I'm assuming that probably people that may have potentially made millions and millions of dollars and have not mentioned anything about it, or perhaps have suddenly come into multiple Lambos overnight with no justification of how they appeared. But hey, who knows? Regardless, this could be coming to a country near you, and I hope that this is a good litmus test of not only what to expect, but also how not to approach this. Because these tweets, come on, I think we can do better than this. That's pretty bad. And the idea of giving up all of your addresses, government is... Well, every entity is notoriously bad for keeping private information private. And when you give over that type of information to individuals, government or not, then it's only a matter of time before somebody who wasn't supposed to have their hands on that information has it. And when somebody knows your Bitcoin addresses, can see how much money you have, and if it's a lot, you become a target. There have been Bitcoiners that have been kidnapped, held against their will, even killed in some instances for their coins. And so it is important to try and maintain that financial privacy to prevent stuff like that. And I think the CRA needs to appreciate that and be very careful about that, while of course still making sure people pay their taxes. Anyways, I'm going to move on from that one, but I thought it was interesting given that it involves all of Canada. Then I think it's probably going to start to become more of a relevant issue across the globe. Okay, now this is interesting. So Bitcoin transaction volume recently plummeted by 30%. So the daily transactions that were happening on the Bitcoin blockchain essentially took a nosedive. Why? Is it worrying? Is it not? Well, there is a group called VeraBlock. And so they were using Bitcoin for they were testing the function of what they're trying to do. And I'll explain what they're trying to do in a moment. But while they were using Bitcoin as their testnet, they essentially were reporting that between 25 and 45% of all Bitcoin transactions were them. They were trying to use it and make sure that their platform was functioning as they would like to use it. Now, what are they doing? Now, this is the interesting part. So they are looking at a way of using alternative blockchains, so blockchains that are not the Bitcoin blockchain, for specialized purposes. So maybe smart contracts, maybe pegging to things that are not on the blockchain, so pegging to real world assets or whatever. Stocks, security tokens, stuff like that. Using alternative blockchains for that type of information, but then linking it back to the Bitcoin blockchain for the reference and for the security that the Bitcoin blockchain produces, because essentially the Bitcoin blockchain is the most secure blockchain on the planet. It's incredibly difficult to compromise that information, and after a certain amount of time, really, it's impossible. So it would take billions and billions of dollars to reverse a transaction that happened yesterday. And to sustain that would cost even more. So they're trying to capitalize on the security provided and the security and surety of information that is provided by the Bitcoin blockchain. So a good example of this, where alternative blockchains are not great for their reliability, would be the Ethereum Classic 51% attack. For those of you not familiar, I did touch on this. I'll link this in the cards. A story, I think a month back or so. Anyways, Ethereum Classic, one of the top coins, top 20, I believe, somewhere in there. Anyways, it was 51% attacked, which means that somebody got enough hashing power, enough computing power to be more than 51% of all mining power on the network, which means that they could execute a transaction and then use that computing power to essentially reverse it like it never happened. And what is the danger in this? Well, you could deposit Ethereum Classic onto an exchange. You could use then your you could take that money that you put on the exchange, trade it for something else, and then withdraw that. So maybe you trade it for Bitcoin or Canadian dollars or whatever you want to do. You trade it for something else and you withdraw that. Well, then you use your hashing power, your computing power, to reverse that Ethereum Classic transaction. So it's like you never sent it to the exchange in the first place. Now you've got your Ethereum Classic still, and you've got whatever other coin you traded it for and withdrew, and the exchange is out that money. So that's a perfect example of how some of these other blockchains are just not as secure. So some of the bullet points that they say are the advantages of linking back to the Bitcoin blockchain are increased trust, reduced confirmation times, potential to participate in fiat markets, and subverting consensus-related token theft. Kind of like I just said, 51% attack. So they're calling this proof of proof. Now, what do I think about this? I'm interested to see how it works in actual practice, but I think this is very interesting, and I think we're going to see more of this because people are recognizing the fact that you just can't really duplicate the kind of trust and absolute certainty that you get with the Bitcoin blockchain, especially after a certain amount of time. And so to capitalize on that and maybe do some more complex computing elsewhere and reference back as again, like a point of reference where yes, this fact is true and we can reference that and be sure of it, I think that could be a solid use case. And I honestly, personally, right now looking at it, I don't mind that. I think it's actually probably kind of a cool and good thing. Now, what does this mean for end users? Well, we just saw they were using 25 to 45% of the Bitcoin blockchain as far as transaction throughput. That was the amount of transactions they were doing. And what does that do to fees? Well, it bumps it up because the block size on Bitcoin is a scarce resource. So it becomes something along the lines of, well, Bitcoin becomes that central point where this is what is set in stone. This is our absolute truth here. This is a list of full settlement of where everything is, and then people can use these other solutions for quick transactions. That's kind of what we're doing also with Lightning Network. Lightning Network, you're essentially making a contract. You know that Bitcoin is locked up here, and the only way to settle is to say, okay, well, we agree that in this transaction, you get this much of the Bitcoin in this contract, and I get this much of the Bitcoin. And when you settle that, it settles on the main chain of the Bitcoin network. I think this is potentially great. It increases demand for Bitcoin, and with demand, we see inevitably prices go up if that demand is sustained. So yeah, I'm very interested to see where this goes. Now, I can't speak to whether or not VeraBlock is a good project, but the idea of it, the idea of people using Bitcoin as their beacon of trust, I think is a great one. And I'm very interested to see this move forward. Now, I want to touch on one other story, and this one also has to do with, I guess, kind of myself locally here. I live in Calgary, and Calgary police are looking to identify 4 suspects in a $200,000 Canada-wide Bitcoin fraud. And what do they mean by Bitcoin fraud? These guys actually frauded a Bitcoin company. I don't know which one. I have my suspicions, but I won't mention which. But what have these guys done? Essentially, they were going to Bitcoin ATMs, and they were using the ATMs to withdraw cash. And so in this instance, when you go to a Bitcoin ATM, you say, I would like to take out $1,000. And the Bitcoin ATM tells you, great, you need to send this much Bitcoin to us. You send the Bitcoin off, and then cash comes out. How are these guys able to game the system? Well, they discovered that a company was accepting 0 confirmations, which means that the Bitcoin has been broadcast, the transaction has been broadcast, but has not officially been noted on the public ledger, that is the Bitcoin blockchain. And the problem with that is you can change a transaction when it is waiting to be confirmed. You can make adjustments. There's something called RBF, or replace by fee. So let's say you wanted to send a Bitcoin transaction and you attached a fee of 1 Satoshi per byte. Well, that one may take a while to confirm on the Bitcoin blockchain. If you've used RBF, you can change that fee and change the destination. You can say, well, actually, you know what? Changed my mind. I'd rather go here. So I'm going to up the fee, and I'm going to change the destination address to here. And so whichever one of those gets picked up first and put on the Bitcoin blockchain by a miner will be the official transaction that is used. What one is more likely to get picked up? The one with the higher fee. So these guys, they would go to an ATM, they would discover, hey, this ATM is just accepting transactions right away. Maybe they have it set to a certain level. Anything under $1,000 is immediate. Anything over $1,000, they have to wait for confirmation. But in this case, they were able to game the system and find that spot, if there was a spot indeed that was restricted. And so they were able to go say, I want $1,000. For example, I want $1,000. The machine says, send us the Bitcoin. They say, sure, and they send out a transaction. 1 Satoshi per byte, there's your Bitcoin. The machine registers it as incoming. It spits out the cash right away. The person then goes off, edits the transaction with a higher fee back to one of their own wallets. I'm assuming this is what they did. And then all of a sudden they've got the cash and they get the Bitcoin redeposited back into one of their own wallets, and the company running the ATMs is out the money. So this is an instance of scammers scamming a Bitcoin company. And Bitcoin can be a cruel and unforgiving beast when it comes to making mistakes. And this is a mistake that could have been avoided. I think it's one that needs to be paid attention to. Zero confirmation transactions are not official, and people need to realize this. And things like RBF and editing your transaction before it's been confirmed are getting easier. It's becoming simpler for regular everyday users to do this. So Bitcoin companies should be aware. You should be changing your settings to not accept zero confirmation transactions, regardless of the amount, because it costs nothing for somebody to try to execute this account. Let's say somebody tried to do this and failed. What happens then? I want $1,000. Send the Bitcoin. Okay, I sent it. Oh, I'm going to try and execute this attack. Crap, it didn't work. Oh, well, I still cashed out. I still got my cash out in exchange for my Bitcoin, so I didn't lose anything. But you can attempt that. You can rebuy the Bitcoin, and then you can do it again. So the cost of doing this is literally just the cost of the transaction fees, whatever the company is charging for the ATM usage. So not super high and potentially high rewards. So Bitcoin companies, please do take note of this. And individuals too, don't accept those zero conf transactions, especially if you're transacting for something of high value. Wait around for the at least one confirmation. A few is better if it's high value. But anyways, I am going to leave it there. I hope you found today's stories interesting. And yeah, don't forget to hit up my website or my Teespring, either one. And I will see you guys tomorrow for your daily session.